Hi there, just for fun, I thought I'd show you how it works. So this is Facebook, FB. And so if I turn on my SuperTrail, you can see that this is roughly over a 1 year period. And so all I do is, might sort of move it out just a little bit so I've got more room. But you can see at a 12% stop loss, that's what this line here represents. You can see that it, gets stopped out here. It has a fairly good run through here, and you would have got stopped out up around here. So that's at 12%. And so all you have to do is, with any stock, you might say, well, I'm really only interested in, let's say, what happened over the last, 6 months, let's say June, July, that sort of period, or 4 or 5 months. And so you might say, well, looking at here from June, let's see what sort of a stop loss I would have needed from this sort of period. So, if you're sort of trading a bit more aggressively. So you might say, if I wanted to keep the stock the whole way through, I would have needed to have around about an 18% stop loss on it. If I wanted to keep it through that period there, you can see I would have needed a 20% stop loss on it. So that's quite wide, but you can see, 20% would have kept you, through most of this period here. So it's always surprising how most stocks do seem to trade in a very sort of a common range. So, what sort of worked through here, also typically does work, more recently as well. So, we'll get back to the question about, what happens if I, let's say, look at it over, the April period onwards, just to make it really tight. So let's go all the way back down. So you can see at about an 8% trail, if I was just looking at this period through here, that keeps me in for most of it and would have got me out, pretty early in the piece. A 7% trail. So see, 7%, all I'm doing is looking at how many times the pattern changes. And so I'm just trying to look for an area where, it's kind of smooth and steady. Take out this bit here in the middle maybe. So 9, 10, 11. So around about 11% would have caught me most of this run here. So if I use this other tool, it's hidden behind this thing. So if I click on this and say, it would have bought roughly up here. So that's where it would have bought. And if I said up to where it's sold roughly, which is around about here, just where the line changes, so that would have given me about a 20% gain. You can certainly make it more aggressive, but in your case, you said you might want to do intraday. So let's say if we flip this to 15 minutes and had a closer look on the 15-minute candle. Let me get rid of this indicator here, or this little liney thing here. And so let's say if I was looking on the 15 minutes, so I always think that something like a daily time frame probably works a bit better for this indicator. But let's see what we can do and how close we can get. Because the stock's in a bit of a downtrend at the moment. So you can see something like a 2% indicator. You might get some of these little tiny runs here, but it's really not trending well enough for me to probably want to trade it at the moment. It's definitely in a downtrend. So you can see at around about a 3% indicator. It's important to know that this isn't the buy signal down here. It's actually where it crosses that red line. It turns from red to green, and so it's saying we think the trend might be turning around here, so buy it here. But then you'd actually end up selling it here, so you would have lost money. But you would have shorted it here, and then you would have sold back out around here. So you might have made a little bit. You would have bought it roughly here. At the moment, you're still in the trend. So, that's why I always say, combine it with something like an RSI, or even a MACD. So you're getting confirmation from two separate signals when you're trading these things. Again, that was, fairly reasonable run. That would have left you, a bit sort of flat, I guess. But you can see here, you would have caught that break, or you would have been stopped out through that period. You might have bought back in there. And so I just always say, try and set it to a value where, you kind of make sense as much as possible. So, that was sort of a bigger trend through there at 5%. You can also do things like you can manually enter in 5.5. Makes it a bit better. It's very, very similar to the SuperTrend indicator. So if you turn the SuperTrend on, but you can see how many times you sort of get stopped in and out on that one. If I go, I think it's already reset to its defaults, reset settings. Yeah. So you couldn't trade that on the SuperTrend. That's why mine's a bit better than the SuperTrend. That would have sort of kept you out of entering back into what's probably a fairly bad trade at the moment. The other one that's also good is a parabolic SAR. So let me just have a look. Parabolic SAR. So this is another one that can be quite a good automated indicator. Turn off my SuperTrail. That's a SAR, not a parabolic SAR. Sorry, one sec. Parabolic. So maybe it is the right one. I want this one here by Everget. So again, it's much more volatile than what my indicator would allow you to sort of get at on a 15-minute candle. So I think that mine's superior to this one as well. But either way, you can sort of see that it's just not a good area to trade. And so again, don't forget you're not buying down here, you're actually buying up here, and then it's saying sell here. So you'd have lost a little bit there. It's saying buy here, or it's saying sell here. So basically go short, and then it's saying get out here. Whereas if I overlaid mine on that same sort of thing, you can see I just would have said stay out. It's not worth entering the trade. Maybe something like a Bollinger Band you could look at. I like Bollinger Bands. Again, it doesn't really tell you much that's useful. Sometimes people say if it gets to the bottom of the band, here buy, and then when it gets to the top of the band, sell. When it gets to the bottom of the band, buy. But they see that it hasn't sold up there and it's still going down. So you would have got trapped in that one. Bottom of the band, buy, sell, buy, sell, buy, maybe sell. I don't know. Looking at that, maybe a bit of a compression squeeze, so maybe it'll rally. Good volume coming through. The RSI is starting to go back up. Buyer interest is coming back in. So I think that my indicator is probably superior to these, but I do tend to look at it on a bigger picture view, just because you get more of a trend out of the daily, sort of candles, I guess. But it's just sort of showing you really here that, you know, unless you're a very good day trader and you're literally capturing the highs and the lows, and I'd be trading it using a VIX or something like that, then you're likely to get stopped out. Like I would have said, if I was trading this, I would have said I'd probably have about an 11% trail, so I could capture most of that move. But otherwise, I'd Facebook's just not ideal. Like it's a bit volatile at the moment. But you could be in a good value area here. Like it's a long way down from where it was. So if you're trading it, now could be a good time to buy. But the volume sort of telling you that the buyers or the sellers are the ones who are in charge at the moment. But your MACD is starting to soften and might start to turn green. So anyway, that was a much longer explanation of what I thought, but I just thought I'd share it with you just in case it gives you any insights into how this SuperTrail works. What I do, just to show you very quickly, I might find a list of stocks. I'll just sort them alphabetically just for fun, and I'll set the SuperTrail to, let's say, 10%. And this is how I use it. So I'll set it to 10%. I'll set it for 1 year. And all I do is I now flick through and say, well, see this stock here at 10%, it's kept me all the way through here and sold me, sold out here. So I really look for stocks where they're not too volatile. So see this one, Blackstone, again, great looking stock, 10% would have kept me all the way through here. And all I do is I say, well, this is a stock it's gone up 122% over the course of a year, but it's a lot less volatile. And so what I'll do is I'll say, what would have kept me in? 11 or 12%. So what I would then do is I'd then go to my broker account and I'd say, well, maybe set it somewhere between 12 and 13%. And that would have kept me through most of the natural movement of that stock. So let me go back down to 10. And with that particular stock, if I went from, let's just show you, if I went from, say, 11, 12, and I went okay, and then I went this tool here, and I said if I bought it here, and I rode that all the way up to here where it said sell. So for my 12% trail, in theory, I might have got around about 113% gain. And so, you adjust that stop loss, as you trade the stock for longer. You can see that 12% would have been rough through here. But let's see, in hindsight, what would have kept me in that trade there. So 13% would have been fairly good through there. And if I really wanted to keep it all the way through, that was that March 2020 last year when the whole market sort of stumbled and crashed. But you can see something like a 19% trail, which is too big, would have kept me through all of that through there. But anyway, so let's go back to 10. 1 year. Yeah, that's not too bad. Bit rocky, very good. So that one hasn't had any sort of a dip in the last couple of periods. 40net. Google's been pretty good. So see how Google's been nice and steady. It's only dropped me out just there. And so if I'd got stopped out there, what I'd then come back and do is I'd come back and say, well, I know that it's kept me in the trade for a long period of time. 9% looks like that, 8% looks like that. But if I go back up to, say, 11%, and that would have kept me all through that period there. So next time I buy Google, I might buy back in and say, well, I'm going to make my stop 11%. Because all you're trying to do is you're trying to say, what's the natural behavior of this stock? And if it breaks down, if it breaks through that natural behavior, get me out. That's how I trade, trying to find these, really big, nice long runs. And the other small tip is that the closer it is to this green line, like here, it means it's more of a value area because it's not too far away from, that natural sort of movement. And you can see here when it was close, if that's why I always use the RSI. You can see here that the RSI was certainly saying it was in a very oversold position. And so it's likely if it doesn't cross that line, if it bounces back up, then it's likely that it's going to keep running. Anyway, as I said before, sorry about that longer video, but I just thought I'd do it just for the fun of it. That one again is not too bad, 11%. So hope that was useful.